Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right. We are back with another episode of Real Estate Investing Club. Today we have Matt Ryan with us. Matt is the founder of re-viv Real Estate, and he is here to talk a little bit about co-living, which is something I do not know anything about, which makes me excited. I love learning new things. So Matt, thank you very much for helping on the show. How you doing?
Doing great, man. It's my pleasure. Thanks for having me.
Right on. I told you before we hopped on here, we like to start with stories. We like to hear how people kind of got to where they are. I'm sure you got a good one. So why don't you take us to the beginning? How'd you get started in real estate in the first place?
Yeah. So it was, I moved back home to my home state of South Carolina out of college and started house hacking before I kind of knew it was house hacking. You could get a house for $150,000. And, so I did that for a couple of years, purchased properties, got roommates, so on and so forth. I started my construction company in 2010 and moved into that full time as a subcontractor, working in energy efficiency and green buildings. So that was kind of like the first intro. And then the next major step was I had accrued a little bit of money, was kind of invested with this supposedly, wealth manager, stock market guy, kind of as like a favor to my dad, because I didn't have enough money to actually get a legitimate, broker to invest with me. And I chipped my money in and it sat for like a year. And I got like 2% or something like this. And this was in the middle of like 15 or 16. I was like, this is a joke, man. I'm out of here. So I took that money out and I bought a foreclosed duplex in an up and coming neighborhood in Charlotte, North Carolina, where I found a construction company for $65,000. And that was the first investment property that I made. One of my most successful. And it was,
I was going to say, I bet that thing's worth at least what, 250, 300 now?
It's funny. I sold it, for an undisclosed amount, but basically a 2.5x equity multiple. I did like a Redfin or a Zillow, and it was like $600,000 or something.
Okay.
I was like,
it's a duplex. That's a good point. It's a duplex in Charlotte. Yeah, that's crazy.
Yeah. But so that was the genesis for me. And in my experience with the local community member there, kind of set me up for what would become re-viv. So that to me was always kind of the beginning of my career in real estate. So
cool, man. I love it. So you did house hacking before it was house hacking. That's always exciting.
Yeah. I mean, I guess it probably was a term back then, but yeah, they was just like, get a cheap house, get a roommate and split your rent, split your mortgage. Right. So
renting out rooms to roommates. I guess that's not a novel thing, but of course we were the ones that came around and gave it a name, house hacking. So cool. Yeah. You got started with it. I know you were talking a little bit, before the show, we were talking about co-living, which is something, and it's not a term that I'm super familiar with. So why don't you take me to co-living? What is co-living? What do you do? Why is it good for the community? Why is it good for the investor? All that stuff.
Yeah. So kind of like what we talked about with house hacking, right? In these dense urban cores, you have people that'll take a 3, 4, 5, 6 bedroom apartment and they'll go out. Someone will maybe co-sign or put a security deposit down, and then they'll sublease out to people that they may or may not know, right? All in the effort of kind of bringing down their collective rent. So if you were to rent a studio in San Francisco, you may pay $2,500 to $3,200, but effectively you could go and rent maybe a 4 or 5 bedroom house. And once you split the rent up by everyone may be collectively paying $1,500 to $1,600 a month, right? So there's a pretty significant savings there. And I call it the Craigslist model. Right. And so even before Craigslist, it's existed for many years. And even before it was kind of transitioned into this idea of these hippie communes in the 70s and 60s, co-living has always kind of existed. Right. But there's a lot of inefficiencies. Right. How are you going to furnish the apartment? How are you going to manage utility costs? How's it going to be cleaned? Who's going to, I don't know if I said this already, but who's going to provide furnishings? Right. So there's a lot of friction in that model. In addition to that, the kind of lease up process can be a little bit awkward, right? Because these people aren't professionals; they have a W-2 job. So co-living operators saw this, in the last 8 to 10 years, and mind you, it's been a model in Europe for quite some time. And they simply just simplified that. They basically have a lot of them operators have tech platforms like Common and Bungalow, where you can go in there and get 3D, models of the room that you're going to rent, of the apartments. very turnkey leasing strategies. And so effectively, it's just that it's a rent a bedroom model. And it's easy. It's a easy way for 22 to 35-year-olds to, who are moving to a major metro in pursuit of a job where they know absolutely no one, to plug into a community very quickly. And that's what's made these operators very effective, right? And there's, just like there was about 40 plus million millennials, that hit the job market and, over the past 15 years, 20 years, there's about 47 million Gen Zs and late stage millennials that are going to be hitting the job market collectively over the next decade. So there's still going to be a huge demand for housing in these job producing urban cores, right? And so the reason we're tackling that strategy and we're so bullish on it is because we see that demographic moving in, and their problems are still very much the same. They lack affordable housing that they can rent. There's, again, huge barriers of entry as far as housing stock that's actually set up, right? And there's a very huge benefit to them in the fact that the majority of these people are already paying upwards of 40% of their income to rent. Our property in Sacramento, the average studio rents $1,600. When we finish that project in, the next 9 to 12 months, we'll be renting out bedrooms for $1,050 with $50 in utility costs.
That's pretty right there for sure.
And these are brand new renovated properties. That's a historical building in Midtown Sacramento. This isn't, your kind of mom and pop run type, value add play. And so it's a diverse kind of unit mix. You're renting a bedroom, but also we're still and other co-living operators, micro apartment operators are doing the same thing. They'll typically have at least one ensuite bath per dwelling unit, sometimes two. And you typically try to limit to where no more than two people are ever sharing a bathroom. Okay. So you're in a value add strategy, you're definitely upping your bathroom counts. And you're trying to limit people anywhere between a 3 to maybe 6, 7 bedroom pod where people are sharing a collective kitchen and a series of bathrooms, right? Anything more than that gets a little bit more crowded. And that's effectively how it works, man. I mean, there's been mass consolidation on the venture capital space and the operator side. There's been a few key developers that have moved in and started to scale. And we feel like it's going to be a huge asset class in multifamily over the next decade. So
nice, man. I love it. So it sounds like what you guys are doing, you're just taking the house hacking model and just making it more professional. You're putting more of a business structure around it.
Absolutely. And we'll be doing we're doing smaller value add deals. Like we took 2 commercial office buildings, one in Denver, it's 4,500 square feet. We have the office building I referenced in Sacramento is 8,500 square feet. Those will collectively be 9 and then 21 bedrooms in Sacramento. Those are smaller scale operations, proof of concept. A lot of the VCs started out doing very similar projects. And what we're moving towards is a ground up build to suit co-living model. So we'll be eventually developing properties to effectively be rented out as co-living, and then probably ideally be doing mixed use. We've tried to get co-working components in larger buildings that we've underwritten and made offers on. I think that's a really ideal setup. I think it makes a ton of sense. But then also larger developers have started to integrate just traditional, studio 1, 2, 3 bedroom apartments into their unit mix as well, just to kind of diversify. And I think that makes a lot of sense. If you got someone who says, hey, I really love my co-living building, but I'm kind of ready for my own studio, I think it makes a lot of sense as a developer to be able to move them over and, here's the keys to the studio in the exact same building,
Gotcha.
And so that's
this. I'm just trying to picture it in my mind how it looks, and what kind of pops into my mind is an a bed and breakfast kind of model. So you're basically you rent out rooms individually, and the only thing that differentiates it from a regular apartment building is that each person is renting. There's common spaces, and so there's a common bathroom, a common kitchen, a common kind of like a dormitory back in college. In fact, I lived in one when I was at UW here. And it was just a house that had individual rooms, and it was just a normal house, but we all rented out each room separately. So you're taking that model, and right now you're buying the buildings, and then eventually you're going to be trying to build specifically for this purpose.
Yeah, ground up development, which, like I said, a few larger kind of mid-market sub-institutional developers are starting to do. And, there's enough runway in that marketplace that ideally we want to follow in those similar footsteps, because, trying to convert an existing single family home or an industrial warehouse, that's kind of where we started in Oakland for like 18, 20 months. really, really hard to find that building stock, really, really difficult to transition. These two buildings that are office conversions, they're very unique because they were previously residential, but they're also historic. So
that's
they're going to have
red tape you don't want to have to jump through.
It's extra red tape for it, but they're cool buildings, right? Like they're extremely unique. Like the ornate details are all there. But obviously, if you're really going to try and grow and scale a real estate portfolio, those buildings are not going to be the way to do it, right? They're going to be a piece of the puzzle. But again, we feel like there's a ton of runway in this marketplace, and we want to fill that gap. So we're going to have to move out and go to kind of a purpose-built development model, which ideally would be launching, in the next 16 to 18 months. So
very cool. Very cool. And you guys, I'm assuming this model really flourishes in markets that are not overpriced, but they're, more expensive. Seattle, San Francisco, Austin, places like that, where, you're in your studios, your one beds are going for 2,000 plus per month. Is that correct?
Yeah. And I think it's really interesting to add an apostrophe to that, right? Whereas I've seen this, like I met a co-living operator who was doing it in the suburban markets of Charlotte, right? And I'm like renting a 3 and 4 bedroom house, 5 bedroom, and doing extremely well. And I was like, oh, that's kind of weird. Like it doesn't make, for me, it didn't fit my investment thesis because we like high density urban, and that's kind of within our business model and what we pursue. But in my mind, and once we kind of got through the details, the reason it worked is because you're obviously getting a higher rent per square foot threshold, right? You're getting a little bit extra of a premium. It's typically
economics work. Yep.
At 15 to 30%. And the tenants in turn, again, they're getting a better service and they're getting a lower rent. And that's where the affordable by design kind of nomenclature comes up, like for people who are building co-living micro apartments, is that you're effectively kind of reducing square footage, but also adding this community amenity package in and streamlining a lot of that for people. Again, that little niche of the market that we discussed. And people were seeing very discounted savings in the tune of $200 to $400, $500, $600 a month. And that's big money for someone who's 22 to 23, over a couple of years or even 3 to 4 years. And so I think that, really what it's about is affordability, which is so key in our market right now, especially for that demographic where, they're going to be facing very similar hurdles that the millennials saw coming into the job market. I mean, I came into the job market. I'm going to date myself here. I think I graduated in 2006, 2009, 2010 was a great time.
Yeah. That's when I graduated.
Is that? Yeah.
So yeah, I mean, I basically I did the same thing all the way up until I was probably in my mid 20s, maybe 26, 27. I just rented out individual rooms from houses all throughout Seattle. So totally makes sense to me. In your guys' model, are these houses furnished? Is everything it's like almost corporate housing, or are you expecting people to bring in their beds, their cabinets, all that stuff?
Very similar to corporate housing, with the exception that when you rent that room, you're furnishing that room.
Okay. So just the room, but the common spaces, they have their furniture.
Correct.
That makes sense. Cool. Right on. So for someone who wanted to get, somebody's listening, they think this is a great model and they want to get involved. If they want to do it themselves, what should they be looking for when they go to buy a new house? Like, what makes a perfect co-living facility or co-living house to buy and rent out room by room?
Yeah, that's a difficult question. And here's the reason why, right? If you're going to live in it and rent it, and you can be more hands-on with the management and you can kind of screen, right? The operating model, i.e. the property management model of co-living is obviously a different animal, right? And I joke with people, like I've been giving my shout out to Guy Peru, the art of co-living.
Oh, nice.
This is a gentleman who's in Europe. He owns a company, Co-Live. There's been a European model there in co-living for much longer, right? But the reason I bring the book up is there's a lot of nuance to this. And there's also like a integration of like technology platforms being implemented to kind of better the experience for people. At the end of the day, it's core property management, but it is a little bit more challenging, right? So I think you have to really be honest with yourself about that component. The second component is if you're going to do a project, maybe you could get away without a heavy value add piece. Maybe you find a turnkey property that's 4, 5, 6 bedrooms. You say, I can make this work. I don't know of a lot of those properties that exist. How are you going to finance it? You're probably going to face challenges, but I think that's probably kind of your base model. I can tell you what we were trying to do in Oakland that we thought we could scale relatively quickly that didn't work for us because we had rent control in addition to other barriers, is we were looking at single family homes, 2,000 to 4,000 square feet. They needed here we have earthquake seismic. So you're typically looking at a structural retrofit, i.e. new foundation. So we were thinking, okay, we can get another floor in there if we get to do structural retrofit. And then we have an ADU law. So we could add another 1,000 square feet on an ADU. So we were kind of playing Legos where we were saying, all right, can we get to a 4,000 to 6,000 square foot house, 10 to 16 beds? And then we were looking at industrial warehouses of 4 to 16,000 square feet and using another variation of the code to basically get to anywhere from a 16 to 50 bedroom with a mixed use component. That was kind of our business model. Again, for lack of kind of inventory and deal flow, we weren't successful in that. That's where we found a little niche in the office buildings post-COVID, which is really interesting. But I think hopefully that kind of gives people the framework. Now we were looking at heavy value add because we also wanted to do ozone, which is a whole nother layer of complexity. But I think, something kind of in that wheelhouse where you got a bedroom count, you can get to a higher bedroom count and maybe have 2 to 3 units. And then, do your research on the operating side and really, if you're going to do it yourself, great. But to hand this off to an untrained person, I think you're setting yourself up for disaster, and there's also great operators out there that you can reach out to on a co-living basis, and try to get your first property as well. So.
Yeah, I remember my first property management experience when I bought my first triplex back in the day. It was a nightmare. So I can only imagine, with a whole bunch of people under one roof.
I've done my first value add deal in Sacramento, Revive's kind of first initial project. We are going on our third property manager in 3.5 years.
And dropping like flies. Well, hopefully this third one lasts for you.
We're hoping so, man.
All right. Well, hey, I just checked the clock. We are through our initial time. So I do have to push us into the quick question round. Are you ready?
Sure.
All right. Starts with books. I just saw you pick one up. So that's a good start. I'm a big bookie. Give me 2 book recommendations, one for general life wisdom, one for real estate specific.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Ooh, okay. So the one that I've been reading recently, which is what I usually kind of default to, is 4,000 Weeks, Time Management for Mortals. It's a complete deviation from your traditional time management. That's all I'll tell you.
All right.
I've been a time management nerd for almost over 10 years now. And that one kind of flipped a lot of the philosophies on its head, which I thought was really impactful for me, especially as I moved into the later years of my life. The second one, it's not real estate, but it's investment focused. When people ask me about investment book, Howard Marks' Most Important Thing, to me, one of the most amazing books I've ever read from an investment philosophy. And he's one of those guys that takes, something as nuanced and complex as investing and breaks it down into extremely simple methodologies, very simple kind of anecdotes. And that's what I love about him. He's a brilliant man too. If you Buffett and all those other Dahlia, all those guys Charlie Munger get the spotlight, but Howard Marks is up there, man. He's a brilliant, brilliant man. So I would highly recommend that book as well.
I will have to check that one out. That was called, what'd you say? Most Important Thing?
The Most Important Thing. Yeah.
Most Important Thing. All right. That's going on my list. And that moves us to the next question. This is for your younger self. So if you could go to the Matt who had no experience in real estate, go up to him, shake his hand, look him in the eye, give him one piece of advice moving forward?
Yeah, you got to find more experienced people to surround yourself with who have done it. People talk about mentors. Yeah, I was never one to ask for free advice from people, but like maybe there's 2 to 3 people that you could come up with a really distinct set of questions, and ask, maybe instead of 2 to 3, like 8 to 10 people, and get 2 to 3 people to answer you. You can go on Upwork and hire a fractional CEO, a fractional COO. I hired one of those a year and a half ago. It was very profound, 25 years experience, didn't have to pay him, a big old fat salary or stock options. And then there's business coaches. They're a dime a dozen. They can be really hard to come by. You can go really expensive, you can go really cheap, but I think that's another really, and not just a business coach, but a business coach who has experience in your particular market segment or in real estate, right? Like, they can kind of open doors for you as well. I think those are really important components.
Yeah, that's great. And I totally would echo that. Having a mentor or just anybody who's been done there, done that, and has experience in what you're trying to accomplish, that is invaluable, really. So great advice. And that moves us to the next question, which is your Superman strength. We are all gifted with something that we individually gift to this world. We all have strengths. You're no exception. So what is it that you are exceptional at? What is your Superman strength?
Yeah. I would say my knowledge of the construction world, but we just 5x our construction pipeline, and I'm not feeling like Superman right now. I've had a lot of balls drop. I think it collectively goes back for me back to like business school that I didn't get into, but like I aced all my accounting classes whenever everyone else was getting B's and C's in accounting. I walked into the final exam, aced it, just crushed it out of the park.
Makes sense.
I can build pro formas. Like I can get lost in Excel for a day and be a happy man.
Excel's my love language. I love that.
Yeah. And so I think that's kind of a superhuman strength that I'm trying to navigate towards. And also, it's definitely helped me in a construction management place, because now I've started to really look at my pro formas and my projections, and then what I'm getting from my construction team, or, pre-construction, what we're getting numbers wise. And I'm going, wait a second, like, we can't go 100% from a pre-act bid to a pre-construction bid, or, when we're 30 to 40% difference now, how do we close that gap to 15 to 25? Right. And I think you got to have really strong understanding of your pro formas, not just your underwriting process and how it translates. And that will kind of, especially if you're going to do value add, right? If you want to do turnkey properties or buy big, $20 million, you're doing like screwing in new light bulbs and doing light, I think it's a different story. But even then, I think the financial modeling is where I can continue to excel. So
perfect. And that is super important in real estate. So that is a good strength to have. And that moves us to our second to last question. This is for the United States. It's a big place, a lot of opportunity out there, a lot of square miles to buy up. So what market are you most excited about that is not your backyard?
Yeah, Denver, even though the secret's out on Denver, right? I look at all the pocket neighborhoods. We were very big on kind of our own proprietary data sets. We haven't done as much of that since we've, been really heavily focused on another area of our business. So I haven't looked at the core fundamentals of Denver in a long time. I've just been looking at touch and feel when I'm going there visiting our project site. And my touch and feel on Denver is I still think it has another 10 years of runway, from a real estate business. If you're savvy and you're keep your head down. I'm really bullish on it. I think it's purple politically, seems to be, and those are the markets that I really like, especially coming from California, where I'm just continually beating my head against the wall, from a regulatory perspective. And so I really like the Denver market.
Perfect. I love it. Denver is one of those places that I've always wanted to go, and I just haven't been. So I really got to get that thing on the calendar sometime soon.
You come out and check out our co-living property, man. I'll tour you around.
There you go. Would love that. All right. I lied. That is not the second to last question. This is the second to last question. Second to last question is tools. I use countless software tools every day. but there's always one or two that I go back to. So what is one software tool that you cannot live without?
I'm not a big fan I won't give the description of the project management tool, the actual brand of project management tool that I use, because I'm not a huge fan of it right now. But I think everyone has to have a collective project management tool. I've always struggled to find one that integrates into a CRM platform. Yeah. And I did it once and I used Zoho, and that was just a complete catastrophe. Like, Zoho is like the most Ford Pinto of software when it comes to me. Like, don't do it. If you had like very basic stuff, great. But, so I think a project management tool is integral, especially if you're running remote teams. It's like the central, tool. And I'd say project management tool, we use the OKR system, objective key results. That layered on top of it, I think is like, it's the best pound for pound investment you'll ever make as a small business owner and someone who wants to do something, from 0 to kind of 1. So
there you go. And if anybody listening they want a recommendation for a project management tool, I will put out monday.com. That's what I use.
Yeah.
It's pretty good. It has its problems, but Monday, I've used all of them, and Monday is so far my favorite.
Cool.
So that leads us to the very last question. And I promise this is the last question. You've given us a lot of good advice, so I'm sure people want to reach out. What's the best way for them to reach out? Yeah,
I always give out my phone number. I'm old school. 415-805-8933. You can go to revive.com. On our homepage, there's a link right there where you can schedule a call with me. It'll go to my assistant. He'll route us out, for a phone call. But yeah, I try to be pretty accessible as much as possible. So
awesome. I love it. I will put those in the show notes. So if y'all want to get in contact with Matt, go ahead and click a little more in the description. It'll pull down the full description. In there, you can find the URL, and I won't put your number in there just because I don't want to share that kind of information on there, but I will put the URL. You can click on the URL and reach out to say hi to Matt.
Sounds great.
Matt, that wraps it up. I appreciate you coming on the show.
Thank you so much, Gabe. Really appreciate it, man.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you have any questions whatsoever, reach out to me, Gabe with realestateinvestingclub.com. Other than that, I hope you guys have an absolutely fantastic week. It is the 5th of July, so I'm sure it's sunny wherever you're at. Keep rocking real estate, and I look forward to seeing you on the next episode.
Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode and were able to pull some actionable advice that you can go home with and apply to your own investing business. Before you go, I have a gift for you. If you're a new investor looking to get started or an established investor looking to take your business to the next level, I've created an ebook just for you available on the website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find a deal that's actually a deal, how to finance that deal with little to no money down, and how to exit a deal for maximum value. And if you get the ebook today, I'm going to bury you in bonuses, 7 of them to be exact. First, you'll get the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating real wealth in real estate. Then you'll get the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools and systems and even the vendors we use to grow our business. After that, you will get the top 100 best performing keywords pack, which will give you the exact keywords we use to target leads online and generate leads without having to lift a finger. Next, you'll get the contracts bundle for wholesaling and renting real estate, which will give you access to all of the contracts we use in the field to execute all types of transactions. After that, you'll get the Investor's Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automagically from those calculations. Next up, we'll give you the Investor's Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And finally, you will get the Wholesaler's Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently
to our buyers. I know that is a ton of things to say. I'm glad you were able to stick with it. So you'll get both the ebook and all of those 7 free bonuses when you download the ebook today. All we charge is the admin cost to run the show. So if you are interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page and take advantage of that deal. With that housekeeping item covered, I hope you have an absolutely fantastic day and even better week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.